Guys, we're back again. Now we'll talk about the RSI, which is the Relative Strength Index, and how I use that and other traders use that to determine whether something is overbought or oversold. It is another momentum indicator, just like the MACD we just talked about. We'll go into Edit Studies and type in RSI, the first one again, add selected. We'll keep all that information as is. Go ahead and hit apply and then OK. We'll go ahead and we'll go to the 1 day 1 minute like we did before. For the sake of this video, I'm going to go ahead and remove just the MACD so you're not looking at the wrong thing. Later on in the video, I'll go back and add it again so we can use or look at how they're used together. So right here is the RSI, the Relative Strength Index. It shows the strength of a stock and whether it's overbought or oversold. Overbought is anywhere above 70. You can see there's a white line here talking about above 70, and that's when it turns red. Down here at 30, you'll see right there 30 is when it's oversold and the RSI turns blue. And you can see this sort of moves with the price trend of the stock. So how this is used in trading, you can see right at the open the stock was bought up, bought up, bought up, bought up a lot. And you can see that right here, immediately it's overbought, meaning that a lot of demand is in the stock. There's a lot of buyers, and just like with everything else, what goes up must come down. At some point, these people are going to lock in their profit, which means they're going to sell off, meaning there's more supply in the market than demand, so it's going to start selling off. And you could see that here. Once people start selling off, this thing peaks, and it starts coming down, and it starts coming down towards the oversold area. You can see it makes its way back up until it sells off again, and now it's oversold, meaning it's a really good deal. An example I gave earlier is you aren't going to go buy a new iPhone for $10,000 just because it's overbought. You're not going to buy an iPhone way up here for $10,000 when you can wait for it to be worth $200 and you know you're getting a good deal and can potentially sell it later for some profit. So what you want to wait for is the RSI to be lower than overbought. Because if you look at it and it's overbought and you buy there, you can see the trend of the stock was down after that. It sells off, comes back up a little bit, but you're still not at break even. You're below break even, and then it sells off more. So what you want to wait for the stock to do if it's overbought is sell off and find a better entry point that'll better maximize your profits. So you can see how this works throughout the day. Right here could symbolize a good time to sell, or to buy, I mean, because it is oversold and you can buy back in, and like I said, you can make upwards of 1.92% profit if you buy in while it's oversold. This again can be used on any chart, just like we did with the MACD. We'll go over to when AMD was getting really bought up. You can see right around here it's way overbought. Kind of drops down to where it's not as much overbought, still gets bought up again, comes down again right here, and then gets sold, bought up, and then sells off and keeps selling off. So not every time when it's overbought does it have to make its way all the way down to 30 and oversold. It can stop halfway, a quarter of the way, a third of the way, or even 75% of the way. As you can see, as with these, it sort of follows the price trend. And once this thing keeps selling off, you can see now it spends most of its time in the oversold area. I'll go ahead and add in the MACD again, so we can look at how you use multiple indicators when trading to find the best time to buy a stock. We'll go back into the 1 day 1 minute here. And again, back towards the beginning of the trading day. There it is. So what we first talked about in the first Traders Training group was how there's supports and resistances, and how a support can be this 180-day simple moving average. So we can see this was used as a support right here. Right from open, it sold off a little, made that wick right there, but immediately was bought up. And you can see that through the crossover right here in the MACD and the RSI making its way up. You can see the MACD starts to like peak and sell off, just like the RSI. It peaks right here. You can see it's all happening within this time frame right here. These two candles right here give a lot of information that think the AMD is going to sell off a lot. And you can see it sells off, the RSI starts to decrease, the MACD decreases, and then right up here it reverses. The RSI, you can see, starts to peak out, doesn't exactly get overbought, but it hits this peak, just like this. MACD hit its peak and then reversed, and then it sells off. And right here again, you might be thinking, wow, this thing's pretty oversold. Not completely oversold. MACD looks like it's starting to reverse, but again, it has not triggered this crossover here yet. So you keep waiting, the thing gets more oversold like it does right here. And you can see from there, the RSI starts pointing up. We talked about a lot in the first traders training group how we want our account to grow, and to want our account to grow, we want to invest in things that are making an uptrend, and how we can draw arrows at the edge and end of every line we see, and if it's pointing up, that's the way our account will grow. You can see right here, the RSI is pointing up. If we draw an arrow there, we can see the MACD is starting its way up, and we can see this crossover occurred, which is always a good sign, and it is pointing up if we draw those arrows as well. So you can see right here would be a good time to start thinking about buying the stock. And then we come over here and we know that this used to be used as a support like it was in the first minute of trading, and we know that old supports become new resistances. So we know that it will be used as a new resistance as it was here. It got bought up, and you can see RSI starts to peak and sell off. MACD starts to peak and sell off a little bit, and the RSI, instead of this sharp uptrend, starts to level out a little bit. You can see more buyers come in, and then it drops and uses it as a support. A support again. You could see right here there was almost a crossover, but there wasn't. The RSI was bought up, it went up a little, and the MACD bars turned to highlighted neon green again. Until over here, when it found its high point, its resistance, you could see the RSI starts to turn downwards, MACD turns red, there's a crossover, and again, we're on a downtrend. And that's how you can use all three of these indicators to find trades rather than relying on just one indicator. Before, without the RSI and MACD, so just ignore these, I can only make them as small as this. But right here, you would only use the SMA as an indicator before when you guys didn't have the RSI or MACD, so you'd think this is going to be used as support and make its way up, but instead it's sold off. You throw the RSI in there, you can start to get an idea that this thing isn't completely oversold. There is still some room for it to go from 30 all the way down to 25, which is what it did. You add the MACD in there. Let me make this smaller. You add the MACD in there, and you can see this thing still hasn't completely reversed. So now you know that this isn't a good buying area, that it still will sell off more, and that you can buy later down here to ensure the best profits. And you can tell that through using 3 indicators in one, and that's not even the most you can use. You can use up to 4, 5, or 6. A lot of people have plans they set up and rules they make where if not all those rules are met, they don't enter a trade, and that's something you guys will have to develop for yourself. Uh, but there you have it. That's how you use the RSI, and that's how you use the RSI, MACD, and a moving average together to find the best place to trade.